Robinhood reported, Daniel. So, did you see those numbers? I mean, they were freaking horrible. They were horrible. I mean, they were freaking horrible.
Yeah, they were rough.
This company, I shouldn't say this because the users are within us and we're in crypto, we're in this industry and security tokens, and I know there's a chance that we can do partnerships with them. This company's getting sued. They're going to get sued. It's going to be a big lawsuit where they'll have to pay, maybe a few $100 million and admit no wrongdoing. Right?
I like that.
That's the lawsuit. But and I'm going to tell you, let me hear your opinion.
Hold on. Are you upset about the numbers? Are you upset about the numbers or the guidance? Because I like how they were
horrible, and the numbers just didn't beat both.
Yeah. Hey, at least they were honest. I think the CFO said, "Hey, it's going to be impossible for us to predict any of this going forward."
Is that what he said? It's impossible.
I think he was related to crypto because, and to their point, hey, when you have a lot of volatility, that's what drives user growth, people signing up, wanting to, that fear of missing out, FOMO, whatever. You only live once. I don't want to cut these guys slack because. Again, you want to put emotions aside. I'm guilty of not doing that just because the theme, the meme stock trading, I don't care about that. I care about how the gamification of things is and just, I don't know, the CEO, they're shady about the pay for order flow and all that kind of stuff. So that kind of bugs me. But yeah, go ahead and have fun with these numbers, Frank. I know you got them pulled up there.
I mean, look.
Is the stock down still 10%? I think it's below the IPO price now, right?
Let me see where it is. So no, let me see. Where was the IPO price? I mean, it went up right away, but yeah, now it's down. Yeah, it's down 10% today. I'll show you guys this chart. When did they go public? This is July at 38, and now it's 35. So it went 38. It fell right out of the gate, right from 38 to 35, and then the meme crowd got into it, and this thing surged like $70, and then only for like a day or two, and then came down. It's been drifting lower and lower and lower. Here's a problem, okay? If you can watch this on YouTube, if not, I'm showing a chart at the beginning, right? These guys did a direct listing. All right, they do a direct listing, and you're looking at when you do a direct listing, you don't have to go through the IPO process. So now, through a direct listing, you kind of make your own rules, meaning that anyone who wants to buy, you do. So if you're going to do a direct listing, chances are you have a massive platform with a lot of people on it that want to buy your stock. Because then you don't need the investment banks. The investment banks provide that liquidity for you, right? That's the liquidity event, the IPO. They do a roadshow before and talk about the numbers. These guys talked about their numbers. They raised guidance into the quarter. Their numbers were the best they were ever going to see back then, right? Because that's when we first hit highs for Bitcoin. It was like the perfect time for Robinhood to come out. Perfect time ever. So Robinhood comes out and they paint this picture for everyone like everything is great, 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 which you're supposed to do, which all companies do, right? Same with Virgin Galactic, right? With those two idiots. Hey, everything's great with Chamath and Branson, who cashed out for like $300 million, and now the stock's getting crushed. Again, they destroyed a retail investor. So here's Robinhood. Robinhood comes out, paints this picture, and they're selling this to their clients, to the people who are using their freaking platform. This isn't Wall Street where you're like, I don't care. Wall Street's making their fees. These are the people who are using your platform, your most loyal customers. You're saying, hey, everything's great. This is a chance to buy. Here you go. It's awesome. And now look. They just report a loss of over $2 a share. They're supposed to report a loss of 20 cents. You're looking at revenues rose 35%. That would be a good number. Well, this company's trading at a much crazy inflated valuation, and they were expected to generate $437 million. They generate $364. This is like right out of the gate. And then you're looking at the guidance. The guidance. So Q4 revenues, they're expecting now of $325 million. That number was close to $500 million. So why would this company get sued for? It's because you painted this picture to retail investors. And why did you do that? Because when you do a direct listing, you could sell on day one. And the laws they had, not laws, but what they had with their compliance is that insiders could dump 15% of this stock on day one. 15% of their ownership. And that's why you saw the stock really get crushed, because these guys are in $4, $5, $7, $8 while this thing comes out at 35, 40. They don't care. Selling it at 25, they're still making a profit. But you're getting destroyed. So now you have all these insiders coming out. And then when the stock went to 70, they tried to file even more. Insiders filed to sell close to 100 million shares. So they probably sold these around $50. It's now 35. So you have a company that's promoting its metrics, saying how great they're doing. The insiders are selling into your face, shoving it down your throat as you're buying this because you think you're getting a great deal. Then the stock crashes. These guys made out a fortune. Their numbers are terrible now. And who gets left holding the bag is you. The retail investor gets. I'm sorry, they get fucked. I got to say it. And it's for them to not come after that is just a joke. I laugh at this stuff. I really do. I mean, Coinbase at least, their metrics, they're more in line. I think that's the platform. Robinhood is just, hey, it's just a money grab. It's a money grab, and it worked. And you know what? Even if they get sued for $200-300 million, all those guys made money. Big deal. They're going to take that money out of the company. They're going to give it to the SEC, and the SEC, who knows what they do with it. And then it doesn't matter. As someone who bought this stock, you're not going to get any money, right? And that's Wall Street. That's why everybody freaking hates Wall Street. And the ironic thing is here, Robinhood is supposed to be anti-Wall Street. That's supposed to be all these young kids showing how, hey, this is our platform, and this is how much power we have. Melvin Capital, this is where, the meme, the apes, all that shit is there, right? And yet you follow the Wall Street model, and not only did your stock come down, you buried your best clients. You buried the people on this platform. I don't know. I can keep going and going on this.
I think you can. That's pretty good. No, what a positive note to end the podcast on, Frank. But yeah, the numbers, when I read that, so we use briefing as one of the paid things that we use for market information, which they should sponsor us, Frank. You need to reach out.
All the time we mentioned them. I know I tried that one time. They were like, they didn't even know what to do. So, but I think
you're not big enough yet. That's what we got to do. We got to get big.
S&P now, so they're really big. They got bought by S&P.
Oh, okay.
I believe. Right, so now, it's off the table. We'll see.
All right.
Deal with them because it is a great service, though.
But I like how it said, the loss was $2 and change a share, and then it says, well, it may not be comparable because it's so bad to the actual what they thought was the estimates.
Yeah, they didn't take any losses. Away,
and I mean, the consensus of 489 million and change for Q4, and they came in at no more than 325. That's what 33% lower. That's, to your point, that's a hell of a miss. So yeah, be careful with this stock. Vlad is not in the same. Well, you could say he's successful, obviously, because he's a gazillionaire. But if you want to buy one of these stocks, stick to the big tech conglomerates that Frank mentioned earlier. You don't want to bet against.
Yeah, and guys, you really have to. I mean, when it comes to crypto is pretty crazy, and you're going to see ups and downs because we just sold a lot of our newsletter. That deal is open for another couple days where I discount tremendously. And I told everybody, I said, listen, this is a place where you could see like the average position on our portfolio is up over 600%, and that includes the losers, our full portfolio. However, it doesn't mean crypto's go, like a lot of people like crypto's going to 250,000 this year. I don't know. I know that Bitcoin, and when I say crypto, I meant Bitcoin. Bitcoin's going higher. And when Bitcoin goes higher, a lot of things are going to move along with it, and these trends are going to develop. But it's going to be incredibly volatile. I mean, there's a stock that I recommended, 1inch, that I bought, that I was down 30% for a while on it. And same with my subscribers. And in one day, this thing goes up 100%. And you look at a chart of it now, and this is just, in 3 months. I mean, you're looking at this thing where 3 months ago it was 220. Now it's over 5. Some of these things explode. But, the volatility, you got to make sure when you're getting into these things, and when it comes to crypto too, you just be careful. I mean, it's incredibly volatile. You want to be able to buy these things where you could add to your position over time. But when I see things like Robinhood, it just gives the industry a black eye because it's associated with crypto. And that's really what pisses me off when I see that. When things like that, we associate with, when you're using crypto, again, it is a publicly traded company with the Wall Street way, but you could buy Bitcoin through that platform and other cryptocurrencies. But when I just look at this industry combined with Robinhood, and then you look at Coinbase as well, Coinbase, I think, is doing the right thing. They got a lot of upgrades. That stock came down well off its IPO now. That's a company we sold at a little bit of a loss because, look, there's a lot of headwinds there, and now the stock has moved a little bit higher. But we'll see. They are getting upgrades. There's a big difference, guys, between Coinbase and Robinhood because Coinbase is a pure play in crypto. Crypto is getting widely adopted, massively adopted. And Robinhood is just a play on the younger generation. And are they trading as much? Because a lot of these ESG companies got wrecked. AMC fell. A lot of these stocks, and they're seeing like that trading activity go down tremendously. There's a big difference between those two. Where one is a pure growth play, and the other one's kind of like, who knows what's going to happen? Like they said, if you're a company, Daniel, you come out and you say, I don't even know. I can't even predict what this is going to be. Investors don't like that. And that's why you've seen the stock really, really get. You just, the guidance too, but you got to be able to say, hey, this is kind of what we see. Wall Street likes that. And when you have uncertainty, that's when people leave the stock. So I wouldn't be surprised if it goes lower from here.